Okay, so that brings us to the cash payments journal. It looks very similar to some of the other ones we've seen. If cash is going out, if I am writing a check, the credit is always to cash. The debit, we can see here the most common thing is for them to pay their accounts payable for. If it's to pay on their accounts payable. If it's something else, it goes under other and we say what it is. If you notice here, the merchandise inventory is for a credit. So that's for when I pay off my accounts payable and I take the discount. I credit merchandise inventory. So these two would go together if I take the discount. So credit to cash, debit to accounts payable, or something else. And if it's something else, I have to see what it is. Again here, if I'm paying on one of my subsidiary ledgers, when I post that, I just put the check in there. Otherwise, I put the account number that I debited to take care of that. And then again, I would post these guys kind of as I go. I would post these totals at the end of the month, and this is the account number I posted it to. So this should look pretty similar to the other ones we've done. These are my subsidiary ledgers, my subsidiary accounts payable, all the specific people I owe money to, and I'll update these daily. And then the other accounts I will just update kind of monthly with the totals. So not too different than the other ones we've done. By this point, they should be starting to look a little bit familiar. So let's look at a couple here. On January 5th, I wrote a check. So on January 5th, check number 430 to purchase equipment for cash. So the debit would be to the account equipment. So I'll put that here. That's the account I'm debiting, and I'm crediting cash. So $1,700 debit, $1,700 credit to cash. And then once I post it, I'll put the account number in there. On January 7th, I purchased merchandise inventory for cash. So the debit will go to merchandise inventory for $450, and then I will credit cash for $450. And that was check number 431. On the 18th, on 1/18, I wrote check number 432, and I'm paying off my accounts payable to Cat Company. So it's going to be a debit to accounts payable for $775. Yeah, so I'm debiting my accounts. Oops, sorry about that. Debiting accounts payable because that's what it says. But I'm taking a $100 discount, so the actual check I'm writing is for $675. So a debit to accounts payable for the total, credit merchandise inventory, credit cash. That's really exactly what we did in Chapter 5 when we paid off our accounts payable. And then we have to update who we wrote that check to, so we credit the right account in our subsidiary ledgers. And then I paid a bill. Okay, so I got the bill and I paid it right then. So on the 28th, I wrote check number 433. I would have debited, it looks like, utilities expense and credited. I would have debited utility expense for $260, credit cash $260. If I had, back to the 18th there, if I had paid it without the discount, then again I would have debited accounts receivable $775 and credited cash $775. But as it is, these two credits right here equal this one debit. So just like in the other ones, the next problem asks us to total it up and then post them to the ledgers. So if I total these guys up, I've got a total credit to cash of $3,085. I'm going to take that off so it doesn't look like a minus and confuse us there. $775 in accounts payable, and a total to the other stuff of $2410 going to various accounts. So now it asks us to so we did that one. We're going to post to the subsidiary ledger here, and it's telling me that I owed $1,900 to the cat company here, and that would have been a credit balance. And then the other accounts that I have, it's giving me the balance in each. Cash is account number 111. It has a balance of $5,000. Merchandise inventory, equipment has $9,900. Total accounts payable is $1,900, and there's no balance in utilities expense. That account is $411. So we're going to post each of those. And so here is here's number 2. We had a credit balance of $1,900 in where's my highlighter? We had a credit balance of $1,900 that we owed them. We just debited $775 because we paid it. So the balance that we owe now, the new balance, so I now owe $1,125. And then I've got 1, 2, 3, 4, 5 accounts to post to here. And so again, on each of these, we can see cash had $5,000. That's a debit balance. I credited it. $3,085. That's my total. Oops, where'd you go? Here. That's the total that I credited. And here. Well, while we're here, we posted this one. All right. And now we just posted to cash. So that's 111 to show that I posted that one. And so the new balance in my cash, oops, I keep crossing those out. The new balance in my cash account is the $5,000 I had minus the $3,085 worth of checks that I wrote out this month. Merchandise inventory here, we can see that we started with $2,100. We debited, so that means we bought stuff, but then we credited for that discount. So we take the $2,100 plus the $450 minus the $100 to get my new balance here of $2,450. And then I can go back to the beginning here and say, okay, I posted this one to account 118, and I actually posted this one to account 118 as well, so I'll fill that in here. And then equipment, we had $9,900. We debited it. We purchased more equipment, so we add those two together, and here's my new balance. And then this is account number 150, so I go back here and tell it I put this to account 150, and now I know I've posted that one. And who do we have left? Accounts payable. We started with $1,900. That's a credit. We made a payment. That's a debit. So here's my new balance, which matches the one accounts payable I have. And so I go back and tell it I posted this one here to account number 211. I think I'm missing the utilities expense one, but we posted that then to, I think I just missed one. That should go to account 541, I think is what they said that one was. And that had a zero balance, yeah, 541, and then I put that one in there. And then we also checked that this equals my total balance in accounts payable. So that's how that one goes. You know, you would just add the utilities expense. It'll have a debit balance, well, it'll have a zero balance, and then we're debiting utilities expense for $260. The general journal then is for anything that is not into one of the special journals. So adjusting entries like prepaid insurance and salaries and depreciation. And the other thing that goes in there is adjustments for sales returns and allowances or purchase returns and allowances. So then, and this is the same general journal you've been using, so everything should look pretty much the same as what we're used to. This one says, okay, which of these transactions should be in the general journal? If it's not in the general journal, identify which special journal should be used. So the first transaction says sold merchandise on account. Right there, we know that this is going on the sales journal. Sold merchandise on account. The second one says issued a credit memo for merchandise returned to the business by the customer. So I sold stuff and they returned it. And so that one is going to go on the general journal. So it is $1,000, and so I am going to, on March 6th, that's going to be that refunds payable. And the I'll have to debit his accounts receivable. That's what it means when it says I'll have to credit his accounts receivable. That's what it means when it says a credit. So this is actually referring to this transaction right here. I made the sale, and then 4 days later he returned it. So accounts receivable B Kelp. Okay, so that's for the $1,000 that I charged him. And then the other half of the return is the merchandise coming back in. So I debit merchandise inventory, and it said the cost of that was $680. And then I credit estimated returns inventory. And this transaction is exactly what we did in Chapter 5. There's nothing new there. Then on the 21st, I purchased inventory on account, on credit, purchased inventory on account. So that goes in the purchases journal, not the general journal. And then I returned $600 of it, issuing a debit memo, which says that I am debiting my accounts payable to show that I don't owe that. That's what the debit memo means. So on March 28th, I record the return, my return in the purchases journal. So I will debit my accounts payable for the pond company by $600, reducing the amount that I owe. And then I credit merchandise inventory because I don't have it here anymore. So I need to credit that to bring the inventory down. And so this goes in the sales journal. The 21st transaction goes in the purchase journal. The other two go into the general journal. And those are exactly the same as we did in Chapter 5. Nothing new there. And then this is this is out of your book. It's just a little process chart here to make sure you know which transaction it goes in. So that might just be a good reference for you. Does it involve cash? Yes. Then it has to be either cash receipts or cash payments. If it did not, then if it's a sale or a purchase on account, just to kind of help you make sure you get the right journal. The last part here, and I just want to talk about this briefly, is, this process, the posting process especially, is kind of how you would do it if you were doing it manually. And most companies are going to use some sort of software. So entry-level software is what especially small businesses will use. QuickBooks, Sage 50 actually used to be Peachtree, if you've heard of that one. And so these are what most small businesses, and they will enter sales, programs, record expenses, produce reports, and help organize the finance. And that really is most of what we talked about, the cost versus benefit, and for most firms, this is really all it needs to do. So it records all those, it takes care of all those things that we said an accounting information system needs to take care of. A more complex system would be an enterprise resource planning system. And so a larger company is going to use this to manage all their data. It's going to have all the stuff that Peachtree does, but it's going to integrate your inventory management system and maybe your shipping stuff and all the areas. Instead of each area in your payroll, all of that stuff is going to be in one. So instead of having different systems for different processes, it's all one big system, and it's huge, and it's very efficient because everything's talking to each other, and you can see what's happening before it gets to you and after it gets to you, and you can see how everything fits together. And it's super, super useful. It's also really expensive. So it costs a lot of money, and it requires an enormous amount of time to implement it, and and you have to pretty much have somebody that's an expert on the system. And and the other danger is if there's a problem somewhere, then that problem goes through everything. So maintaining it is also more complex and more important. So, but that's becoming a more popular thing with big businesses that can afford that kind of investment. And then I just wanted to show you, this isn't going to be on your quiz or in your homework or anything, but since this is an example of how stuff would look in QuickBooks, and what you can see is it kind of a lot of these, this is how they would write an invoice when they make a sale, and so what they sold and the amount, and then this is really, so you're putting in the terms here, the invoice date, and the amount, and then it will automatically send it to accounts receivable and your sales revenue for you. And so it's still doing what we did. It's just you are putting in less, but you can see this actually looks more like the sales journal than just a regular general journal. And it knows which accounts to send it to, but you had to set that up ahead of time. Here I got a bill, and so again I'm putting here's the vendor. I'll put in utilities expense, and this stuff is all coded, and so once you put that in, it knows where to send that. It knows to put that into your accounts payable or utilities payable or whatever it is, and then once you hit enter, it posts it real time to the accounts affected. And so that's kind of how you enter stuff as opposed to, the journal entries. But it is important, you have to set all this up ahead of time. It's not going to automatically know what to do. So you have to put in the keywords and the account numbers and all that kind of stuff for it to know what to do. Here's the bill number for a reference. And then once you have all that in, then you can generate, this is probably QuickBooks Online. They're more and more moving to that, but and so you can go here at any time and say, okay, let me generate an income statement or balance sheet or trial balance, and so it's pulling these from all the accounts based on the things that you've already put in, and so you don't have to go figure up your rent expense. It'll pull that from every time you debited rent expense in your transactions. So that's what QuickBooks look like. I just thought it was worth it to see kind of what that looks like. And that's it for chapter 7.